So I want to give you guys, this is a very brief, just very brief example of balance sheet. So you have the first, you have current assets, you have cash, accounts receivable, you have inventories, you guys have all the information. And then you have an investment, invest in a bond, notes receivables. And then you have the PP&E. PP&E is like a machinery minus accumulation. And then you have intangibles. Not all intangibles are on a balance sheet, but some intangibles are on a balance sheet. So you add all this together, this is the value of total assets, right? On the other hand, you have the liability. Liability is the accounts payable, interest payable, notes payable. These are current liability. That's a short term. That's the money you have to pay back in the short term. And then we have a long-term liability. We have the money you have to pay back in the long term. And then we have a retained earnings. We have a common stock. We have a total shareholders equity. And you add everything together, like I said, when you add liability with equity will be equal to the value of total assets. And the assets also, you can current assets and long-term assets as well. So you can see that's the simple structure. That's the simple structure of the balance sheet. Start with the short-term assets, and then have a long-term assets, and the short-term liability, long-term liability, and the equity, and then you add them, add everything together, should be equal to each other. Should be equal to each other, and then. Let me share my screen with the. This is the simplified example. Let's look at the real example of balance sheet. Can you guys see the Excel file? The Excel file. Okay, excellent. So this is the real balance sheet. This is the data you guys need to work on for the projects. It's much more complicated than the example I gave to you guys. And so let's just briefly go over that. Right? So the structure is the same. We start from what? Current assets, right? Current assets, you can have what? You can have cash, you can have a short-term investment, you have receivables, you have inventories, you have current assets. So it's more variables, but the structure is very similar to the example I gave you guys, if you believe so. We have a long current assets, we have a PP&E, we have investment, we have intangible assets. This is more long-term and intangible. And then you add them together will be total assets, right? Very similar to the example I gave you guys, but just more complicated, right? More items. Okay. And then what you have is you have a current liability. You have more like a debt in current liability, current stuff. So this is the money you have to pay back in the short term. And then long-term liability. This is the money you have to pay back in the long term. So this is liability, and we also have a tax liability and stuff. And then go over downstairs here, you have the shareholders equity. This is the value of the shareholders equity. You have the preferred stocks, you have a common shares, you have the treasury stocks, you have shareholders equity, and blah 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 blah. You have all the other together. Let me go over several concepts with you guys in case you guys are confused. Let's take an example. What is treasury stocks? Okay, this is some ideas. Like if you don't understand this, how can you do data analytics on this? This is my point. Like if you just know the programming, we can have a statistical and computer science students do all the data analytics. But you need to understand the meaning of the variables in order to be able to analyze the variable, help investors. So what is treasury stocks? Treasury stocks means the company purchase stocks back from the stock market. So for example, if I'm a Microsoft, I want to purchase $1 million stock back from the market. I want to save it as a treasury. So that's treasury stocks. The company kind of purchase stocks back from the market, and if they do that, there will be treasury stocks for Microsoft. So this is some concept you guys can, if you Google it, will be very easy, right? Google it. What is retained earnings, right? Retained earnings is what? It's the cumulative profit of the company since start of the business. So let's say if I start my business for 10 years, the past 10 years profit, if you add them together, that's retained earnings, right? That's retained earnings. And also, this is common stock, this is preferred stock, this is a very easy concept. Deferred revenue. So what is deferred revenue, right? Deferred revenue, long term and the short term. So one example of deferred revenue is, so for example, if company, let's say you guys are crazy about Apple, you put a lot of pre-order about iPhones. So iPhone get your money, your payment about your iPhone payments, but you haven't received the iPhone product. So that's deferred revenue for the company. So basically, company gets your money, gets customers' money, but the company has not delivered their product to you. In that case, that's deferred revenue. Okay, so does it make sense? Does it make sense? So basically, you guys pay the company in advance. The company gets your money, but company have not paid you product. In that case, the money the company received will be deferred revenue. And this is all these concepts you guys can, we will not go over them in details, because for each concept you can just Google it, and pretty straightforward. And also you can solo accounts payable, accounts receivable. These are all simple concepts, right? So for example, that the debt in long-term debt due to 1 year. So what does that mean? That means sometimes you see, can you guys see my mouse? Can you guys see the mouse? Okay. So sometimes the debt is due to 2 years, 3 years, 4 years, 5 years. Sometimes you have the long-term debt, but you see the debt which is due in 2 years, next year you will be due in 1 year. Does it make sense? So if that's the case, the long-term debt will become short-term debt because time changes, right? So 4 years later, the debt due in 5 years will become short-term, because after 4 years, the debt due in 5 years will be due in 1 year. In that case, the debt will moving from the long-term debt into short-term debt. So this is a rolling process. You guys see that? This is a rolling process. The debt due in 2 years, 3 years will become short-term debt as the time goes. So and also a lot of assets, goodwill. What is goodwill? I mean, you guys should be able to understand that PPE. This is very simple concept, and we have inventories, we have receivables, income, cash. These are easy stuff. Okay, so one message I want to send out is, why don't you guys look at a real example like Microsoft and Apple, to look at their balance sheet, trying to understand each of the items. If you are a finance major, you want to understand the firm's financial health, predict the firm's future performance, the data is the key. You need to understand the nature of the data in order to be able to analyze the data. So this is the message, one message I want to send out. And this is an annual balance sheet. There's a quarterly balance sheet as well, right? The quarterly balance sheet, you can see that it pretty much is the same. The only difference is what? This is quarterly based, and here is annual based. Does it make sense? So this is annual based. Everything is annual based. This is quarterly based. So that's the difference between a quarterly balance sheet and an annual balance sheet. And we talked about the income statement last time, right? We talked about income statement. For income statement, you can easily do the sales, revenue, expense, and income statement has quarterly and annual as well. And you also have cash flow as well, has cash flow. So we're not going to cover any cash flow in the class, but you can just work on your own. You can look at the cash flow. I think this example is online. If not, I think Sharon can upload. So you can look at all these examples to understand the nature of the data, and think about how to use the data, to predict the future stock price. Think about your own ways. Think about your own ways. So to summarize, how many variables we have? Together, we have about 250 variables available from this data set. So the idea here is how we can use these 250 variables to help investors, to help managers. Let's go back.